Hey, Dan Passarelli here. I want to talk a little bit about technical analysis, and specifically, I want to talk about multiple time frames. Now, when you look at a chart, you're looking at things like support and resistance. To me, that's one of the most common things to look at, as well as penetrating moving averages and maybe some other things. Now, my go-to time frame is the 6-month, 1-day candle chart. Take a look at this chart here of Apple. So here, when I say 6-month, 1-day candles, this chart, each one of these candles on the chart represents 1 day of trading. We have the low of the day, the high of the day, the open of the day, and the close of the day. And we look at these 1-day candles for a period of 6 months. Now, why 6 months? Because to me, 6 months is the most relevant period to look at, because the market and any particular stock was probably just simply a lot fundamentally different more than 6 months ago. But there are times, however, for context or for timing entries and exits that we might want to look at a different time frame. For example, if I go back to this chart and I might want to get some context, do I think historically the stock is high or low? Did it come down a lot? Has it been on a real tear? I might look at a 3-year time frame. Now, when you look at a 3-year time frame, if I were to look at daily candles, that would be really cluttered, because there's like 750 days or something in 3 years. It would be a mess. So most systems will just simply automatically change each candle to represent a 1-week period. Now, this is really helpful because this gives me longer term support or resistance. It gives me a longer term period as to my moving averages, changes them to or from a 50-day moving average to a 50-week moving average, perhaps. It just gives me a little bit of different concept and helps me see the bigger picture. Now, there are some times when I might want to time my entries or exits and be really specific. And in those cases, I'll look at maybe a 5-day, 5-minute, or 15-minute chart. So that means that this entire period is just 5 days here, and each one of the candles in this case represents 5 minutes of time. Now you can see over 5 days, over 5 minutes candles, they are pretty crowded. So I might just choose to do 5-day, 15-minute candles, and that will make things a little bit easier to read. So why this is important is because, look, here I see that several 5-minute or 15-minute periods ago, we broke through this moving average, and often when we break through moving averages, we get some follow through, and that can help me get into a trade and get a little extra oomph right at the beginning, because we love to see trades being profitable right off the bat. And so these very short-term charts can help me get profitable faster and help me time my entries as well as my exits even better. I'm Dan Passarelli, Trade Smart.